इंडिया की फार्मा इंडस्ट्री एक बड़े शिफ्ट के लिए तैयार है। ग्लोबल ट्रेड शॉक्स और यूएस पॉलिसीज के साथ नए चैलेंजेस और अपॉर्चुनिटीज सामने आ रहे हैं। Trump has announced a 100% tariff on branded and patented drugs starting October 1st, 2025, unless companies set up US manufacturing plants. This matters for India as nearly $9-10 billion or 31-35% of exports are tied to the US market. But there are two major reliefs. First, companies with US plants are exempt, like Cipla, Dr. Reddy's, Sun Pharma, Syngene and Glenmark. Second, generic medicines are exempt from tariffs and India is the world's largest supplier of generics. This softens the blow. Most exposed stocks still at risk. Aurobindo Pharma, nearly 48% US sales with limited US plants. Gland Pharma, over 50% US revenue, heavy reliance on injectables and branded contracts. Lupin, about 40% US exposure, specialty inhalers face risk. Piramal Pharma, 41% North America, CDMO model may face cost pass-through issues. Better positioned stocks with lower risk, Cipla, Dr. Reddy's, Sun Pharma, Syngene, Glenmark, cushioned thanks to US plants and strong generics mix. Zydus, 30-35% US, diversified into Europe and India. Divi's Labs, less than 20% US, API business shields margins. Biocon, 25-30% US, biosimilars exposed but partnerships help. Natco Pharma, 15-20% US, oncology generics with low branded overlap. India's leadership in generics, strong API base, and global demand for low-cost drugs. US tariff policy for patented drugs regulatory hurdles and raw material dependence on China is still a challenge. Specialty and biosimilar margins may face pressure. In long term, India's cost advantage and rising global share will drive growth. The story for Indian pharma is clear. Short-term noise from tariffs, but long-term opportunity driven by generics, cost leadership, and US investments. For stock-specific strategies in pharma, connect with Value Ethics, SEBI-registered sub-broker and AMFI-registered mutual fund distributor. Happy investing. Thank you.